The Bank of Canada has just announced again that they are holding the interest rate steady. What does this mean for you? Hi, my name is Adam Nadler. Thanks so much for tuning in again. I'm the owner of Vision Real Estate, and we're going to chat about the overall housing market, what's going on in terms of affordability, interest rates, and everything that is affecting the market right now with cold, hard data. But before we do, if you have any questions about real estate or you want to chat with me about real estate, feel free to use the link in the description below. That'll connect you to a calendar where you can book a quick time to chat with me at a time that is most convenient for you. Or feel free to just shoot me a question to adam@visionrealestate.ca and I will get you a personal video response within 24 hours. And if you enjoy this content, please join our community, hit that subscribe button and hit the like button so this video can be pushed out to more people like yourself. So let's jump right in. I want to start off by at least acknowledging that we shouldn't just take everything the Bank of Canada tells us at face value, because Tiff McClem has said things before that didn't really exactly pan out the way people thought it would. Like, for example, this.
If you've got a mortgage or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
Having said that, he did backpedal a little bit later on as time went on, but that was only way later and people were already starting to purchase like crazy and grab variable rates. Now, granted, everybody makes their own decisions, and whether you grab a variable or fixed rate that's going to affect you in the future is your decision to discuss with your mortgage broker. Having said that, a lot of people got screwed. So I want to go over exactly what Tiff McClem is saying now, what he said in the last interest rate announcement, which hopefully, if I get this video out quick enough, is the same day as when it announced. Now, every single central banker out there right now is battling inflation. It is the one key metric that's going to decide whether or not they are holding rates steady, raising them, or lowering them. And if you look at the Bank of Canada's website, they have inflation in the 5s right now, but that data is from February. And so we don't actually know what inflation is today, but Governor Tiff McClem seems to be very confident that inflation is going to be in the 3% range by this summer.
The recent data has reinforced our view that we expect inflation to be around 3% this summer.
Now, here's where I start to get really skeptical, because when pressed about that, he started to say that they have now changed their forecast to say that they're going to hit target, which is 2%, by the end of 2024, when before they were just saying 2024. We said inflation would come back to target in 2024. We've now said the end of 2024. And that really reflects the fact that there are a number of things that still have to happen. Inflation expectations, yes, they are coming down, but they're still higher than our own forecast. They've got to come down some more. It's interesting to hear that, right now we're in April, within 2-4 months, we're going to be at 3%, but then to get that final last percent is going to take a whole nother year and a half. Now, of course, everything is relational. So the first bit of the reduction of inflation could be a lot easier than the final percent from 3 to 2. Having said that, we just don't really know. They keep kind of changing their forecasts on us, and so we'll have to see how long that actually takes. There were some amazing questions in this press conference, and I want to just really highlight one, the question about immigration and how that is playing into the supply and demand of the economy right now. I've been hounding everybody about this on my YouTube channel, whether or not you're new to the channel or not. You can go back and see, I've done videos on this where I'm basically telling everybody that this is a very big deal. We took in 1 million new immigrants into Canada last year. That is smashing an all-time record. And 60% of those immigrants are coming in through economic programs, meaning they have money when they get here. Now, of course, that is amazing for propping up the Canadian economy and helping to boost our dollar, but it also brings added demand into the economy, which is also going to boost the housing prices.
We also know that population growth has increased a lot. Those new immigrants, they're also consumers. They're renting, they're looking for houses, they're buying food, they're buying other things. So they're adding to demand as well.
One thing Tiff McClem really points out is that it adds both demand and supply to the marketplace. Overall, I think it's a really good thing for our economy, but I do think that he's probably understating what the actual relevance and impact of it's going to be on our economy. But I'm not an economist. I'm a realtor. And what I do is I really watch the housing market. And what I can see right now is that the new immigration and the leveling out of interest rates is increasing demand by leaps and bounds month over month. Sales volume is up from February to March by 1.6%. And that may not sound like a lot, but when you put it into context, sales volume has been down roughly 50% year over year every single month for the past 6 or 8 months. But now if you look year over year, it's only down about 35%. And I think that moving into May, when we get the numbers for April, it's going to be drastically different. We're going to see a lot more activity moving on to the housing market. And I think that's due in large part to immigration, which leads us, of course, to pricing. It is boosting pricing. We are seeing the average price starting to go back up again. Housing affordability has not really gotten any better. Housing affordability is as bad as it's ever been. Meanwhile, inventory is exceptionally low, which is adding a lot of upward pressure to pricing. We are down in total new listings 44% year over year. So as you can see, we have a ton of different factors pushing in different directions, but overall, it is pushing housing pricing up. So what does this mean for you? Well, it simply means that if they continue to hold the key interest rate steady and do very small minor adjustments along the way for the rest of the year, we're going to see an incredibly hot housing market moving forward into 2024. This is simply because demand is far outstripping our supply, and supply has been our biggest issue by far for a very long time. Now, just to give you some basic numbers so you can kind of understand what kind of problem we're looking at here, we have the worst housing shortage out of anybody in the G7. So we are already at a massive shortage to begin with, but on average, let's just say in Toronto, we build about 35 to 38,000 units per year. And we just brought in 1 million immigrants, 60% of whom are on economic programs, meaning if they don't have all of their money to buy right when they get here, they have it coming in slowly and they are working on building up their credit. So they're going to be jumping into the housing market in the next year or so. And of those, let's say 600,000 immigrants that are coming here to purchase and live and start their lives, about half of them end up in Toronto and the GTA. And that's typical because this is where the jobs are. Vancouver, Toronto, and Montreal are the biggest hubs of our country, and Toronto being the biggest business hub of the three. So our demand is going to continue to way outstrip our supply. And as interest rates start to really become more predictable, the consumer mentality seems to be shifting into one of, well, okay, I'm not so scared and terrified that my mortgage is going to boom on me in the next little bit. So expect a busy spring, expect a busy summer for real estate, and especially in 2024, expect a booming market. But that's just what I think. Let me know what you think in the comments below. Do you think that we are going to hit our 3% inflation by the summer, as Tiff McClem has said? Thanks again for watching, and I'll see you next time. If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.